The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the January 27th, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone had a great weekend out there. Lots of things moving in these markets. Hey, I'd love to hear from you this next hour. It's really all about you. I'm here to serve you, so feel free to give us a call at 877-927-6648. If you can't call in, well, we've got it all set up. You can send me an email, but please do it early. Send it to Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, in our Tiger's Den, like Peter, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 350 points. The print there is 28,637. All of the indices are in the red. The Dow S&P's off 41 points. The Nasdaq down 100 off 156. Spot volatility index up 17.5%. Trading out at 1709. Gold's up $6. Silver is down 3 cents. Light sweet crude is. No wonder that hasn't changed for a while. I got to set this here. Give me a second here. I was wondering, why is this thing down 20 cents all day and not moving? Well, I know why. It doesn't have the right contract up there. It's back $1.29 and up a full point, and 9 ticks are the 30-year Treasury bonds. Lead the charge dollar-wise. The upside, it is Nevro Corp. NVRO, that's up $8 and change, 7%. Riata Pharmaceuticals, 4%, about $8. Beyond Meat up about $7.60. Teledyne Technologies, 7 and change. The downside, it is let's see who's leading. Booking Holdings, $53, 2.75%. Google 33. Amazon is down 27. Intuitive Surgical off 22. So let's just begin by taking a look at the markets. Here's an interesting pattern for you. It's called the Island Top pattern, and it's in place right now just for one of the indices, that indice being the New York Stock Exchange. Yep, it'd be the New York Stock Exchange. So I put a number. Yeah, that's really where we're at. So you can see here, you had this, you had the New York Stock Exchange, NYSE, gap up on December 20th. And in essence, that really began the island out there. And then from December 20th all the way through Friday, it was moving higher, except for the last 4 days where it started moving lower. But today was a gap below the entire low of this island that is out there. Now, that's a very bearish pattern, and will remain in effect as long as price stays below, never ticks above 13,843.97. So that's the daily time frame message for the New York Stock Exchange. There's another message that comes with the New York Stock Exchange, and that's trying to understand the overbought or oversold. In this case here, oversold levels. I know somebody could say, wait a minute, we're down for a couple of days, and Steve O'Sun is already talking about oversold levels. I'm afraid so. It's really not me. It's the tools that you and I use out here. And at this stage, right now, at 1:10 in the afternoon, the advanced decline oscillator reading, that's the difference between the 19 and 39-day exponential moving average of the advanced decline line data. And that creates the oscillator difference between two exponential moving averages. And when we take a look at that, it is now down below the minus 150 level. It's at minus 180.23. We can sit here, we can always go back and take a look at other minus 150 readings. What do we see here? We see at least a counter trend rally. We're just simply going back to October 1st, coming back here to, when was it? August the 6th, it looks like, or August the 5th out there. The reading there was a minus 223. Yeah, I can get lower. I just want you to prepare for a bounce. I'm not saying that it's happened right now at 110, but we must prepare for that. In a bounce here, which may be a counter trend rally, and we're going to go take a look at the markets, try to figure that one out. But we were just taking a look at the New York Stock Exchange. It's island top that is out there, very bearish. And so it'll be interesting to see how this really resolves itself with the advanced decline oscillator moving down into clear oversold readings. Now, this is an daily chart. So we really need to see what does this look like at 4:01 this afternoon to help us understand what the next potential is. If we take a look at the spot volatility index, well, we know there's several things associated with it. If we take a look right now, the current spot volatility index is trading at 1723, which right now is still below its overall 1 year version. We're just looking at the monthly at 1721 versus its 1 year, 3 month, or 6 month out there. If the spot volatility starts getting above those levels being 1829, 1756, and 1776, well, then what we're going to see is a spread reading that gets out of whack. And when we see those ratios out here, this line that you're looking at on my screen here is taking a look at, this happens to be the VIX divided by the 3-month spot volatility index. And when this starts to get above 1, that's when we start to see significant bottoms actually form inside of the marketplace. We're not there yet. Just thought I would just simply mention it. Why? I don't know. Well, I know because I need to mention that to you. If we take a look at what should be anticipated with regard to a bounce, well, this is going to be day number 2, it appears, with a 1-day rate of change greater than 10% out here. And so this chart here, the blue arrows, shows you those other days. Now, I'm not going to go ahead and put the blue arrow in right now. We're up 18%. But if we do see a spot volatility index 1-day rate of change greater than 10% at the end of the day, you've got to anticipate a bounce inside, or you should anticipate a bounce inside the ES mini, at least overnight. Can be bounce or bottom out there. Okay, so that's just kind of a larger view. Now, we've been talking about bounce or bottom. So we need to go take a look at what's the market actually been doing so far today. And now this is all going to be dependent upon different time frames. But since we were talking about bounce or bottom out here, we're going to go to the short-term time frames. And let's start off by taking a look at the short-term time frame for the ES mini. What do we know? Look, the way that the market makes tops and bottoms, when these signals are present, we pay attention. You should pay attention. This is how the market communicates to you and I. In this case here, inside the ES mini, this morning, price is pushing lower, doing less relative energy. We saw a couple of times here where the bulls have tried to take control by generating a bullish reversal candle at the potential completion of one of Stevie's Rhodes momentum indicator bottoming patterns out here. And then what we do is see that the purpose of a top or a bottom, in this case here, let's just talk bottoms, is to try to bust out resistance. We don't know whether it's going to be able to bust out resistance, but we need to understand where is resistance. When we start taking, this is on the bounce, we go take a look at the larger time frames, you and I want to understand where is support, because that is really key out here, and there are very clear areas where you and I can identify those. On this 30-minute chart, it happens to be the top of its TAS market profile. Inside the ES mini, which has been a nice move. It's been between, in essence, the 3230-ish area and the 3253 area, so a decent move for sure, but price has not been able to close above, for 2 bars in a row, 3253. That's the top of the 30-minute time frame chart. But, folks, if we do see closes between now, this 30-minute chart, and say 3:30, 4 o'clock, and it's above that, it's telling you about an additional counter-trend rally. We don't have that message right now. Prices run into resistance at 1:14 in the afternoon. Steve Rhodes with TFNN. We'll be right back. We'll start taking a look at some larger time frames and where its support levels are. Let's do it for the ES mini.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the ES Mini. We're looking at the daily time frame chart for the ES Mini out here. And what we can see is if we, this has got a wave number 7 pattern top out here. That's letter G on my screen. Part of the Chapman Wave tools out here. We begin our counts from the low of December 3rd out there. So we got a topping pattern. Now remember, when you get any kind of topping, this works. It doesn't matter whether we're looking at a 2-minute chart, a daily chart, a monthly chart, a weekly chart. It just doesn't matter. The time frame is irrelevant. The patterns that you and I are using work the same. So in this case here, there's several patterns that I've automated in my tools out here. One of those is a 7th wave move. Looking for those TD9 tops. By the way, the ES Mini top with wave number 7, the S&P cash would be bar number 9 of a TD9 count out there. So in the case of both of these instruments, whatever it is that we're looking at, the responsibility then of sellers is to try to push price down, try to test support. Now, when we take a look at support, there's various levels. The first level of support is always going to be Stevie's green or red line, the oscillator unchanged line. What we can see here is price has been below that. The counter trend rally in the ES Mini on Friday, in essence, ran out of steam at Stevie's green line. Then your next levels, the oscillator unchanged line, then your next levels become your TAS market profiles. Now, in its case, price was already trading above the top of the daily box. So therefore, you've got 3 levels of potential support: the top, the center, and the bottom. Well, what we saw take place with the ES Mini last night was it gapped down below or right at, it began trading right at about the bottom of the daily profile in the ES Mini. That's 3268. Now we're 13 points away from that. I don't know if price is going to close above that. If it does, well, then a key level of support has held. What if it doesn't trade above that? What if it doesn't not trade above it, but close above 3268? Very simple. Now we have one more element, at least on the daily time frame, for us to look at with regard to support, and that would be its breakout area. And its breakout area, that's sponsored to us by the TD Setup 9 count, would be 3181. So if you're asking me where is support on the way down inside the ES Mini, it's very simple. It's at 3181. Inside the ES, and if it below that, then you bring in your next support level, your next breakout area, 3116. That's the ES Mini. That's using the daily time frame. Now, when I switch over here, I move this chart out of the way, you're going to see in the background, you're going to see the 4 equity futures contracts. You're going to see the ES. You're going to see the NQ, then the YM, and the Russell 2000. Now, what began forming overnight, right away, right at 6 o'clock last night, was the weekly profiles. Now, remember, Jay, I'll look at the NQ on my 60-minute chart for you too, see if there's anything. But here inside the what I want you to do is take a look at the little green dots on the ES Mini, the NQ, and the Dow Equity Futures contract. Now, we're using Stevie's advanced Doppler tool, and so these profiles are definitely subject to change. But what I do know, what I can share with you, is these levels they're active. These are what are trying to be formed right now, which are new weekly profiles for those three contracts. In the Russell 2000, a new weekly profile began. When was it? It was on the date of December 27th or December 27th is when its weekly profile began to form. Now, interestingly enough, so so when you break through daily levels of support, okay, assuming you didn't know anything about the TD9 count, well, then what are you going to do? Well, you go to one level up higher, one time frame higher. That'd be the weekly. So now if you're asking me where's the ultimate level of support inside the S&P or the ES Mini, it's 3162. Where is it inside the NQ? It's 8609 to 8706. It's a bullish structured profile. So 8706 could be a level of support. Inside the Dow, it's down at 28209. In the Russell 2000, last night it tested or maybe it went just a tad lower earlier this morning by about a point or two below the bottom of its weekly profile, 1635. So what's that mean? Well, what it means, if we just simply take a look at the week indice, which is the Russell 2000, what you want to know, what you want to understand is that intermediate term support, which I'll consider to be the weekly time frame, has held, and prices bounced off of it really well. In fact, if the Russell 2000 doesn't have that much further to go to close back above its daily profile, which would be the bottom of its daily profile, 1658. So that will make us have to say, something to think about. Now, is that important, these profile levels? Well, if you take a look at the weekly time frame, I think it's extraordinarily important. It's important on the daily time frame, but here's the weekly time frame for the Dow Equity Futures contract. Here's what I'll show you. I'll show you what I showed subscribers earlier this morning, because I just want everybody to get this or understand this, or how can we use these tools just simply to help us understand what the markets are communicating to you and I. When has the market from, and this is especially important for everybody managing long-term funds out there, which is basically should be all of you or most of you. But I want you to understand how these profiles can assist us in understanding where there's been a change in trend out here. If you come back into, let's just say, I don't want to keep pulling it back, but here from October of 2006, you can see price moving higher, right? You can see that. We know there was a Rhodes momentum indicator top that formed inside the Dow. We won't go into that right now, but I can show you. I've shown you zillions of times. What was really key out here is a close below the bottom of the TAS market profiles on a weekly basis. Now, that occurred right here. That began occurring. The cracks in the armor began occurring in October of 2007. What's also really important is that the real first counter trend rally, once price closed below the top or the bottom of the weekly profile, was where price found resistance. Now, if you take a look at the profile here, I'm at the week of December 10, 2007, you will see that price ran right into resistance at the top of that bearish structured profile. I mean, right into it, continued to sell off. We can see that all other counter trend rallies, or most other counter trend rallies, inside the Dow Equity Futures contract, continued to find resistance at the top of the box. Sometimes price just simply consolidated for a period of with inside that profile. Yes, there was a close above the top of the profile the week of that began August 4th, 2008. But then these small-bodied candles for the next three sessions out here on a weekly basis. Remember, the body of the candle, truly the essence of price, telling you that there just wasn't any energy out there. And certainly once price closed below the bottom of that box, the week that began September 29th of 2008, that just said a continued move lower. So the weekly profiles, look, the daily profiles are important. The weekly profiles, just as important for helping you or I to assess what the market is doing. Is this going to turn into just your garden variety 10%-ish type correction, which the markets have typically once a year, or is this going to turn into a larger correction, sometimes referred to as a bear market? Well, one thing is sure. You're not going to see any kind of a 20% or more correction until you start to see key levels of support fail. inside the Dow Equity Futures contract right now. This is subject to change. Maybe we'll know more tomorrow. Maybe it's not until the end of the week. I don't know. But it is out there. It is forming right now. But it's 28,050. We're trading at 28,602 as we speak right now. So that is a real key level that you and I can look at. We can objectively, because not some, I didn't pull it out of my arse or anything like that. We go back, we take a look at what happens. Now, doesn't mean that if we do close below it, that it's absolutely curtains. But what odds favor you doing at that stage is really take a look at your portfolio, probably getting rid of the losers in there. But look where they are. Sound is stinky, man. Sorry about that, David. I don't know what to tell you about the sound not being good. That's a bummer. Maybe it's just me. Oh, I got to tell you about the swarm, a swarm of bees that we saw on the golf course over the week. Hey, we'll be right back. Steve Rhodes with TFNN. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 334, S&P off 39. So, yeah, I'm playing golf Saturday afternoon. We're on hole 11, par 5. And all of a sudden, I'm getting ready to hit my second shot. And I start hearing, this buzzing sound. It wasn't like a little buzz. It was a little buzz at first, and then it kept gradually getting louder and louder and louder. So both my brother and I were looking around and saying, "What's that? What is that buzzing sound coming from?" And then off in the distance, not too far, all of a sudden you can see this little black cloud. And it was bees, and they flew right over us. And at first it seemed like maybe it was just a small group, but it was thousands of bees. It's the first time it's really the first time I've ever seen a swarm. And when it finally passed us, we were kind of like, oh. Now maybe, and I don't know much about bees. I think bees, when they swarm, they're typically going from one nest to another. I think they're already typically full, but I can in seeing a swarm of bees like that, and really flying in kind of formation, so to speak. I mean, they really stuck together, and but I could understand if you were attacked by a swarm, you're just not going to survive that. I mean, man, it was. I don't want to see it again. Kind of glad to have seen that once in nature, but whew. In any event, okay, I digress out here. Let's get back to the markets. Let's go take a look at the charts. We were looking at the weekly profiles before, I believe. Here, let me show you the daily profiles. So we saw, in essence, we saw those. But here, if we take a look at the key level, here's the ES mini. Let's get back to it. Price, again, is below that 32.68 level, and that's really key. This is suggesting that we're going to see a further retracement out there. Yes, counter trend rally, perhaps, depending on today's close, the spot volatility index, things of that sort. But right now it appears that we've got some type of change in trend that should push prices lower. But we've got to take things one moment at a time, right? The New York Stock Exchange, the New York Stock Exchange is down at that oversold reading already. This is just after really, a couple of day decline out here. But it is what it is, and I certainly want to be able to provide you guys with all of that information out here. Okay, so where do we go next? We've covered. I know. Jay was talking about the NQ out here. Now, just out of curiosity, let's go take a look at it and look at it from a 30-minute time frame. So what's the NQ been doing? Well, the same thing that the ES mini, trying to form a Rhodes momentum indicator, which in fact it has. It's confirmed. But what the NQ has not done yet is taken out resistance. And so we can see here the numbers 90-20, called 90-21. Out there, if you were to see two closes on a 30-minute basis above 90.21, you can anticipate more of a further rally. Where? Well, maybe it's just simply the last night's gap to the downside. Maybe it's the close of Friday. Maybe it's some type of pattern setup that we would see. Maybe it's a TD setup 9 count. Maybe it's a wave number 7. I don't know what it will be. We'll spot it when it occurs. But right now, we don't have to worry about that because price is not broken above resistance. That is the 90.20 level on the 30-minute time frame out there. With regard to the 1-hour time frame, the 60-minute, I'll show you what my system is showing me here. No set of profiles, I think, like you were pointing out there, Jay, but it did generate, the 60-minute time frame, did generate a Rhodes momentum indicator bottom. Now, is that important? Is this pattern important? Well, if you take a look at how it formed the top, it was the same pattern, only in reverse out here. So at this stage of the game, I don't have a market profile, just as Jay does it. So what we would do is say where price may be targeting is 9,100. That's the bottom of the current profile. Maybe over the course of the next couple hours, some other profile level will form. So you got the 30 and the 60 on the NQ out here. I would focus on the 30-minute because we've got that resistance level out there. If we look at the 2-hour time frame chart, what do we have? A Rhodes momentum indicator bottom. Now here, where resistance is, remember we talked about you've got these different levels of resistance that we can pay attention to. So on the 120-minute time frame for the NQs, got the Rhodes momentum indicator bottom. Its first level of resistance is going to be its oscillator and change line, Stevie's red line in this case here. A bearish communication to you and I for the 2-hour time frame would be testing and rejecting. Right now, that print is Stevie's red line is at 90.24. So it's going to be between around 90.24, 90.26, something like that on any kind of a move higher. But above that, then the next area of resistance would be the bottom of the current profile. That would be 90.76 out there. So you can see how these markets for multiple time frames are really trying to form some type of bounce out here. It's a beautiful thing to you, in my opinion, it's a beautiful thing to understand what the markets are communicating to you and I for those different time frames, so that we're not guessing what the market is doing. We've got these profile levels of support and resistance. We've got Stevie's oscillator and change line for its different time frames. We've got TD 9 count breakout and breakdown levels out here. As we go to the 4-hour time frame, we don't have any kind of bottoming pattern that is in play out here, so there's nothing that's going to assist us there. If we look at the 5-hour time frame for the NQ out here, Price has broken through on a 5-hour basis a key level of support. Its breakout area, which was 90.23. We haven't seen it close below a breakout area inside the NQ on a 5-hour time frame. Well, I need to add some more. Hold on a minute here. Give me a second to just decorate. I guess I just have 3. That would make sense because I don't like to cloud the charts out here. But let's just put 10 and see where the other breakout levels are. And so in the NQ, so here, this is taking us back into just try to find when was the last time we saw a breakout level, and it was right back here. Let me just get the approximately when that was. That was at 9 o'clock in the morning. Okay, great. You don't care about that one. December the 3rd. December the 3rd, we're at January. So since December 3rd out there, we have not seen the NQ close below a breakout. You're asking where's the buy the dip? It's really simple. It's where price had broken out. And what's cool about this? What's really cool about this tool, folks, is that this is not using swing points. When you start using this tool, and not that swing points aren't important, but if you really want to understand where price broke out, just start getting your head wrapped around this tool and how well it works. If you want to be a buy the dipster or you want to be a sell the ripster, either or, you want to understand where breakdown support is, or breakout support, and breakdown resistance is. And in the case of the 5-hour time frame chart, we now have one bar below 90.23. I believe this next bar closes at 2 o'clock. Let's see here. Yes, it does. You get 2 bars below 90.23. We haven't seen that since the early part of December out there. It's telling us about what we should see as a further decline. Now let's go take a step up to the daily time frame for the NQ. What is its message out here? Well, in the daily time frame, how is this top? Wave number 7. That's letter G. Now, in this case here, a natural pullback inside the NQ won't feel natural to many people, but that would be 86.78. That is where the NQ most recently broke out. Yes, the NQ has not had a red oscillator and change line in quite a while. That's because the price oscillator itself is above 0 out there. So we got a nice, now the weekly, let's just simply go one more step up. That way we will have covered this, and then we're going to go to a break. I don't see any requests in there. So this is just simply helping you to understand what the market is saying. Remember, for each time frame, it's going to do something a little bit different out here. Do we have a top inside of the weekly chart for the NQ? Look where price found support so far this morning. Stevie's green line. Right now, that's printed out at 89.18 on a weekly basis. Now, I don't know where the week ends, but if we do have a bearish reversal candle, right now we've got the Three River Evening Star, we will see a confirmed sell the D point. But if the markets are going to move lower, the price level that the NQ has to close below on Friday is right around 89.18. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, the Dow's off 329. The S&P is down 37 out here. Let's go take a look at the usual suspects out here in the market that folks typically have interest in. Someone was just posting something about gold, Tucker. If we take a look at Goldilocks out here, here's a daily time frame chart for gold. We're going to see that price right now. First, it's got a valid topping pattern. 2 of them, really. A TD setup 9 count as well as wave number 7. Now, what price has not been able to do ever since those tops have formed is bust out support. In this case here, support would be really 1522 to 1532. That's the bottom and the top of its profile. Yeah, believe it or not. Center's right there at 1522, and 1502 happens to be its breakout area. Now, price is beginning to move higher and doing so with less relative energy out there. So this is day one of that pattern, just like any other Rhodes momentum top. If we do see a bearish reversal candle, and whether it's today or tomorrow or the next day, whenever it is, while this pattern is in effect, you would have another topping signal out there. So is it weak? Yeah, I would say it's moving higher with less relative strength, so I would consider that to be weak at this stage of the game. But until the signal confirms, which it hasn't, we just have to go with the other prior top out there, the TD9, as well as wave number 7. But here at least where support is for Goldilocks. We go take a look at silver. Just what the heck? Let's just go through each of these charts. Well, let me move this here so I can actually get to the silver chart. If we take a look at silver, we're looking at the March contract. This has a TD setup 9 count top out here. Price is trading with inside its profile, the top of which is 1812. The bottom is 1765. It's a new profile that's trying to form today. Out here, we can see its breakout level of support is 1781. Price wasn't able to really bust those levels out, but price isn't busting out its highs either. So what we have going on inside of silver is just simply a consolidation moving sideways. If we go take a look at high-grade copper, let's go do that. Our March contract for high-grade copper, it's moving lower. What is it doing? Well, this thing is busted through 2 levels of breakout support, 265, 262. The next one is down at 258. Wide-ranging bar coming into it with a gap to the downside as well. No telling. Now, this did complete a sell the D point pattern out here. Right now, 258.50 is the level where high-grade copper appears to be headed to. How about platinum out here? As we take a look at the metals, if we look at platinum, what do we have? We've got a nice little butterfly sell pattern that confirmed with this little dark cloud cover. Price is now below Stevie's green line. That's at 1011. Price is headed to support, 975.20. If platinum closes below 975.20, you're looking at 912. It's breakout support level out there. Let's go take a look at Treasury bonds. What are they doing? Yeah, what are they doing? They're moving higher. But if we take a look at what they're also doing today is going to be bar number 9 of a TD setup 9 count. This says that T-bonds could form a top, could be today, could be tomorrow if it's a TD 9-count pattern. Now, we can see that breakout resistance for the 30-year Treasury is 163 and 30 seconds out there. Typically, when a TD 9-count counter trend rally forms prior to prior breakdown resistance, it's a pretty decent signal of a top. So we'll just want to watch the pattern, let it play out. We can all see that Stevie's red line had turned green here recently. Could be a pullback to that area. It's a tough call for me on this one because the change in color in the line occurred really right about the bar where price was already testing it. So I won't rely as much on that, but I would rather rely upon the current pattern that is unfolding here right now. So we'll watch for potential of a top inside of Treasury bonds. If we were going to see that, we would then also see key levels of support fail on the short-term time frames. So if we pull over the short-term time frame charts here for the 30-year, I know I've got it somewhere. Here we go. Here's the 30-year. In this case, we're doing short-term. We're taking a look at 30-minute, 60-minute, and the 2-hour time frame. Now, in this case, on a 30-minute basis, Treasury bonds have got a point plus, 1.5 of a potential pullback out there. 159, and I take that back. 2 points, more than 2 points, is what it would require to bust through support. Now, there is a new TD9 count that appears to be forming on the 30-minute time frame out there, so we may get another level of support. But right now, it's down quite a ways before we would know whether or not a key level of support has failed inside the 30-year Treasury. What else do we want to look at? I don't care. Let's look at wheat. I do care, but let's take a look at some commodities out here. If we take a look at commodities, wheat specifically, here's a daily time frame chart. Take a look at its pattern. It formed a TD setup 9 count a few days ago. Think these patterns for wheat matter? Look at the tops here inside of Treasury bonds. Go back into October, TD setup 9 count. Come back into November, December, TD setup 9 count. Now take us into January, TD setup 9 count. Now, with regard to wheat out here, March contract for wheat, its real breakout level is 552.75. That could be the buy the dip level out here. And if price moves below that, we'll have to look for some other pattern to form. But, there's your topping patterns out here. Let's look at how well these things work. Do they always work? No. I still haven't found the pattern that always works. The pattern that always works when you get those top or bottom signals out there. Just simply be ready to take action. Now, the nice thing about the Rhodes Momentum Indicator pattern is 5 very specific steps that are easy for anybody to follow out here. If I take a look at sugar right now, sugar formed a sell the D point. We had a key reversal session right here. Now, when I say right here, let me give you the date out here. With regard to that, that is on the trading day of January 23rd. There's your sell the D point reversal. Price right now is trading below the bottom of a new profile out here at 14.28. This is suggesting that no sugar tonight in your coffee should pull back to $13.37. That's its breakout area. That is the March contract for sugar. If we go take a look at corn. Did we look at corn? No, we looked at wheat. Let's go take a look at corny out here. What do we have with regard to corn? Did we look at corn? Maybe I don't think we did. We've got a Gartley sell pattern. Gartley sell pattern, beautiful Gartley sell pattern, but price has just simply been trading sideways ever since out here. So I don't have anything. You got the hammer candle. We can see key level of support in this about where the low was today. I don't know. I don't have anything to suggest. Just silver. Corn just simply trading sideways out there for its daily time frame. Oh, natural gas. Of course, people want to understand what's going on with natural gas out there. Well, today's action, bearish. There's no other way to call it. Now, if we take a look at natural gas, we know the last high was formed with a TD setup 9 count. We know that the low was formed with wave number 7. That's letter G. And we have seen a bounce. That's all we have seen is a bounce since then. And what's disgusting about today's action is you do not want to see this if you are a bull. All today has been is a counter trend rally right up to Stevie's red line where it gave it up. Now, there's still a bottom signal, so this may just simply be trading sideways within that range. But what you don't want to see is you do not want to see natural gas get below the low from about 4 trading sessions ago. But if you're asking Stevie, has natural gas formed a bottom? No, It's generated a bottom signal. And each time buyers have tried to break out at least a level of support, Stevie's red line, they have failed to do so. Be mucho grande careful with natural gas. Something doesn't look right in River City. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's off 364, S&P down 42 points right now. Brent in Martinez, California wants to take a look at light sweet crude. So let's go do that. Let's do a couple of things. Remember, we're always looking for support or resistance along with any kind of a pattern out here. If we look at the 4 time frames now for light sweet crude, we're going to see that price is below the bottom of the daily box. That's the upper left-hand corner. Prices below the bottom of the weekly profile. Nice box profile. They're the same things out here. So prices below that. That was $56.95. Prices below the monthly profile. And then that takes us to the quarterly. So on a quarterly basis out here, Brent, one of the areas that you'd be looking at is about 49.18. That's the bottom of the quarterly profile. Let's not stop there. What's going on in the daily time frame? Any bottoming signal out here? Well, bottoming signal, we'd be looking at the completion of an A to B equals CD pattern. We don't have that yet. Looking for wave number 7, only in wave number 3, so we don't have that. Looking for a TD setup 9 count. We don't have that. We're only going to maybe be in bar number 4. That's today out here. But what price is also doing, it's pulling right back in about 51.75. 51.75 on a daily basis is TD 9 count breakout. Now, I don't know if that's going to hold, Brent, but it could be one spot. and it has held. It's been tested a couple of different times. So watch that breakout support at 51.75. That's what the daily is signaling to us. Let's not stop there. Let's be thorough. George Thorogood. No. And let's go take a look at the weekly time frame chart. Weekly time frame, Brent, has potential support around 49.96. That's its breakout area out there. Just simply, when I look at the weekly chart, what pops up at me is a consolidation pattern, just a sideways consolidation. The bottom, pretty close to the 49.96 area. Let's finish this off. Let's go home for the day. We are home. And go take a look at the monthly time frame chart. Well, you know what I mean. The monthly time frame, do we have any kind of signal out here? 47.11 would be the ultimate buy area there. And the real consolidation on the longer term basis is between 77.94 and 47.11. Hey, folks, thanks so much for joining me on Magnificent, Marvelous, Magical Monday. Hope to see you on Taco Tuesday. In the meantime, stay tuned for your favorite polar bear, David White. After that, Obi-Wan to take us on home. Look forward to seeing you tomorrow. Take care.
Since 19...